For traders managing small accounts, the 1-minute time frame represents the fastest path to growth. The goal is simple: leverage high-frequency entries to flip a modest balance into significant capital. However, without a structural plan, this process often devolves into a reactionary cycle. Traders find themselves clicking buttons in response to every minor price flicker, being driven more by urgency than analysis. This approach carries a heavy mathematical cost. Entering trades based on a feeling or a sudden candle spike mirrors a coin toss, leaving you with a 50% win rate that eventually erodes an account through spreads and commissions. You can spot this gambling mindset by looking at the trader's phone. They focus on the fluctuating profit and loss display, reacting to the dollar amount rather than the data being printed on the chart. Long-term survival in scalping requires a shift in these base probabilities. Success depends on a filtering system designed to identify specific conditions that move the odds away from a random guess and toward a repeatable edge. Scalping successfully requires the discipline to wait for specific, stacked confirmations rather than trying to outrun the speed of the market. To build this edge, you must first ignore the 1-minute chart. The strategy begins by zooming out to the 5-minute time frame to establish the broader context. The 5-minute chart serves as a filter. It clears away the noise of smaller fluctuations and defines the macro direction, ensuring you understand the path of least resistance. Price drops to a support zone, failing to break through 4 times. Sellers lost momentum, buyers step in. Once this macro support is identified, your directional bias is set. With upward pressure, you are restricted to long positions. Aligning with this macro current changes the math of the trade. Your entry now carries the weight of the larger market trend, providing a significant statistical advantage over a blind entry. This first confirmation acts as your anchor. It prevents you from fighting the dominant tide and creates the high probability environment needed for a precision strike. With the macro bias locked in, we move back down to the 1-minute time frame. Now we are looking for the specific trigger that signals the start of the move. Price must form a stair-step pattern, higher high, higher low, shifting the 1-minute trend bullish. Next is the breakout, a definitive candle closing above resistance. Breaking a diagonal trend line and horizontal level simultaneously creates a high confluent zone for a rapid move. This is the moment of execution. You enter as the breakout confirms, using a tight stop-loss position just below the structure to minimize risk. When macro direction, structure, and a breakout align, the payoff is swift. The market hits your target quickly, driven by the full weight of evidence. By systematically layering these 3 confirmations, you transform a 50-50 gamble into a calculated, high-probability execution. The final step to profitability happens after the trade is live. You must manage the position based on the chart, not your emotions. Amateur traders often sabotage their own success by frantically checking their phones, focusing entirely on the fluctuating dollar amounts in their live account. Professional traders ignore the P&L and focus entirely on the price action. This is the zone-to-zone strategy. Hold the trade until price reaches the next area of resistance, ignoring the fluctuating numbers. This discipline allows for consistent 1-to-3 risk-to-reward ratios. The math only works if price reaches its objective. Mastering this confirmation stacking system means you can execute your trades and be finished with the markets in under 30 minutes. It replaces hours of screen watching with a brief window of focused analysis. This transition turns a stressed trader into a systematic operator who relies on evidence rather than impulse. A disciplined 1-minute strategy operates as a framework of patience. You wait for the market to provide the evidence, and only when the stack aligns do you take the trade.